All right, guys, good afternoon. Welcome aboard to the aftermarket recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thank you so much for taking the time out of your day to join me today and every afternoon, 5 p.m. Eastern Standard Time here on the YouTube channel. Okay, so let's go ahead and just kind of go over the indexes in a second, and then we're going to talk about the Amazon stock split. The news happened about, I don't know, about 15 minutes ago. We retweeted out, we sent it on Instagram. We'll kind of go over exactly what that really means for the stock in general and kind of like what the implications are. So the Dow closed up today 653 points. It was high as about 800 points. The NASDAQ gained 3.59%, S&P up 2.5%, more than that. 7.63% for the downside on VIX, 3245. Small caps did gain 2.82%. The dollar index fell 1.11%. 10-year yields gained 76 basis points. 1.948%. High yield credit bid, so did investment grade bid. The big news today was really oil. Oil coming down was really big. Again, talks of the UAE is starting to talk to OPEC about increasing production, and a lot of it was a buying panic. Again, at the end of the day, 130.50. That's a lot. Sure, could we have more? But are we pricing in just a panic now? I wouldn't be surprised if we get to $100 probably by end of April at the end of the day. So again, anything that moves that sharp that quickly, I don't care if it's a stock or a commodity, 20%, you're looking to sell into that if you're not holding long term at the end of the day. I mean, if you're holding long term, it doesn't matter. But if it's a trade and you usually get that kind of spike up or spike down, that kind of volatility does not last that long, maybe a day or two. You know, you always get that sell the news event. Again, it's just the reversion of the mean. Yes, you'll probably get a higher high down the line, higher low down the line too. But that, usually you don't hold those spikes up at the end of the day. So what I mean is with Amazon, again, and I love me some Amazon. I'm not going to sit here and say I don't love it. I do own shares. But if anything, and you want to take off some risk off the table, if you're expecting a little more volatility, maybe you want to get into something a little, let's just say, less volatile, Amazon would not be a bad candidate if you want to sell into this rip. And again, I love the fact that they're doing a stock split. That'll probably put it around $600 a share or so. So it makes it a little more manageable to trade in options, which is nice. Does it really change anything? I mean, we saw Google had their own stock split too, right after earnings. And if we go ahead and bring that back, you can see when we had earnings, we spiked up and we faded, and we kind of stayed in a range. And that was kind of an event where you probably wanted to sell into if you wanted to take some risk off the books. Granted, Google did hit an all-time high with that news. So again, I'm not going to sit here and say this is not good news for the stock. It is. It makes it more accessible to more of the retail. The $15 billion buyback is a great thing, don't get me wrong. But again, if you're holding this long term, this news doesn't concern you one bit. If you're trading it, or maybe you're trying to swing Amazon, maybe you dip bought at the lows and you kind of want to take some gains, this is when you do it. Right around 29.30. I mean, 29.30, 29.60, maybe 3,000. If anything, you probably want to take profits if you're trading it, if you're doing a medium-term, short-term swing. But if you're owning the stock and you have mutual funds with Amazon, more than likely you do, pretty much you're just going to hold it either way, so it doesn't matter. Good news, don't get me wrong, but would I go ahead and run and buy here? Absolutely not. I would not buy the spikes. You buy the dips and you sell the spikes. Always kind of have it backwards. Google's going to get some love with this news too. Well, not really Google. I mean, the tech world may get a little bit of boost. You can see here the NASDAQ is up marginally, about $2 on the actual move. I mean, is that really earth-shattering? No. So again, I'm not here to kind of be a Debbie Downer. Again, I love the move for Amazon. Would I go run and buy here? No. I mean, if you're owning it and you're holding it, great. I dip bought Amazon. I love Amazon, so I'm cool with it. But if anything, if you need to raise some cash now, again, a lot of people are in different financial situations. Again, I can't speak just in broad terms. I want to kind of have people have sections. Yes, people do sell stock sometime. That's okay. If this is a time of point that you need some cash reserves, maybe you kind of want to move into something that's a little less volatile. Maybe you're saying, I want to buy a Costco instead because Amazon is beholden to the tech and consumer discretionary. Maybe I want to be more consumer defensive. Maybe I want to put a little more portfolio in healthcare. Things like that where you're kind of doing a rotation. This is kind of the moves that you kind of want. You want to want these spikes to sell off and not sell off or take some profit or just kind of move a little bit of funds away. Now, again, everyone is completely different. More than likely, 98% of what I'm saying does not apply to you, the viewer. I'm just saying in general. Maybe you're managing a fund or something. Maybe you're helping out with your parents investments, they've asked you, this is where maybe you want to take some risk off the table, especially if they're older, as an example, to say, hey, listen, great news on Amazon. Maybe it's going to take some profits. We'll sell the news and then see if it maybe gets a little lower. Because why do I say that? Because of the S&P, guys. Again, love the day today. Loved it. We caught AMD yesterday, today, which was nice. We got it only for about 25%. I thought we were going to hit that resistance. The resistance right here on AMD was right around 110.10. We got as high as around 111.70. It hit 40% anyways, which is usually my target. I just wanted to just make sure that we would have got something, because things can change in a heartbeat. For example, in the S&P, been talking about it ad nauseum. 4101 being your support, 4252 is your resistance. We broke above that. Great. The best news is that we settled above it. That's still great. So all we are now is in a new level of our house, to say, on our chart. Right here on the hourly, you can see now 4252 is your support, 4371 being your resistance, right? So if we kind of just created our own little fib, or maybe just a little bit of a grid in a sense of between those levels, because now we're just going to that house. We went from the basement to the first floor. Nothing has been changed yet, at least on the Eastern European front, in regards to inflation, high commodity prices. That hasn't been fixed yet. I mean, nice to see is short covering, yes. But again, this can be sold off immediately too. Why do I say that? 4,300 would have been a really great level, because it would be right in the middle, maybe a little more towards the bullish side or the top end of this range, but we rejected that. 42.99 actually rejected. So looking at it here, if anything, this looks more like a short term. Maybe we'll retest that resistance here at 42.52, and then we can bounce back again. So again, I do have some IWM puts. I do have some gold calls that I'm running right now. And again, the Amazon sucks, but it's nice. But it really doesn't change the market view either. We had a great day in the market anyways due to short covering, meaning that short sellers were closing their positions for the most part, and then that creates the buying, not buying panic, but the buying frenzy you saw today. And it was a very good price action, but the fundamentals really haven't changed. The backdrop hasn't either. I cannot be comfortable to say all green light, go ahead and buy, because we're just not there yet. I mean, 43.71 would be extremely great, but if you look at this market right now, basically we're right at where we were Monday. The last 3 days have basically been negated. That's it, and that's really tough to invest in. Great to trade in, but tough to invest in. Let's go ahead and answer some questions. Will Amazon dip tomorrow? Tough to say. The only thing that could make it dip would be the CPI numbers, the consumer price index tomorrow. Keep in mind that Amazon is affected by CPI numbers and high inflation, higher goods, obviously gas, oil for transporting stuff. So again, higher inflation hurts margins on Amazon too. So again, CPI can definitely wipe this down, which is right at 8:30 in the morning. If inflation is better than expected, then Amazon would definitely boost and maybe can get to around the top part of this wick here, around 30.80, if anything, maybe. Amazon up 2.7 after hours. Yeah, it's up. Listen, is it amazingly up? I mean, oh my God, are we going to get excited? It's great. I mean, let me go and see exactly the after hours price on Amazon. I have right now at 6.62%. I don't have a quote on after hours. This is after hours movement, but I don't have a percentage, the gain. So I'm looking at CNBC, it's 6.62%. A nice move, don't get me wrong. I like it, but if anything, you probably want to sell into this if you're looking to raise some cash, or maybe want to kind of rotate a little bit. You kind of want these spikes. These are the days where you start looking at your portfolio and you say, man, all this stress, is it even worth it? Again, if everyone's a little different, not everyone has the same tolerance for volatility either. So I'm talking to just a different kind of risk averse group. Most people are just like, this is my retirement account. I'm 20 something years old. I don't care. And that's completely fine. But for those who are a little more risk averse, a little older, this is probably a time you want to kind of sell a little bit of Amazon here. Take some profits if you dip bot, or possibly see if you can rotate into something else. Thoughts on IWM put? Yeah, same deal. The IWM put, I'll go ahead and go over here. It was an unusual options activity move on IWM, had some great volume. Let me go ahead and bring that up here. IWM, this one, we have the March 11th, I believe 194s. Yeah, 23,000 involved. That's the highest on the board. And the reason that I thought that it was a good play, or I still think it is really that resistance is right around 201.04, 201.10. And we rejected it again. So again, you kind of have a double top here. Sure, you have a little bit of a V recovery, but again, nothing has really changed. I mean, really today was a short squeeze. I mean, the VIX being down was nice. commodities going down. We need oil to go down 11% today for us to squeeze out a 2.5% gain on the S&P. So if you kind of really think about it, it's almost a 4-to-1. So again, for every 4% or 1% move in oil, you're talking about a 4x move on oil. So again, if you have a 1% down day on the S&P, it's almost like it's a 4% day on the upside for crude. So again, we're almost beholden to these commodity prices. Yes, we cooled off a bit, but nothing has really changed. So again, I like IWM here as the upside. We're nearing that double top resistance, kind of a small kind of a hedge too against the CPI number tomorrow. And CPI will really affect the small caps companies because as inflation grows, interest rates will have to go up to level this out. And this is where the high yield credit markets come into play. High yield bonds will probably sell off on a high inflation reading. And again, how do you borrow money if you're a small capitalized company? You're going to go to the high yield credit markets to go ahead and raise capital, which in turn would hurt IWM, hence the thesis on it. Trade crypto for a month and you'll be resistant to stock volatility. Yeah, trading crypto, I don't know how I can do that. I just buy and hold. And crypto had a hell of a day too. So the news was that Bitcoin surged on President Biden's executive order to study digital currencies, which the industry viewed as crypto-friendly amid the debate over potential regulation. So again, we're starting to see the, not a mass adoption yet, but at least the understanding that, hey, you know, Bitcoin is for real. And I think that's where a lot of traders were very bullish on that. You know, 42,000 right now in Bitcoin, really nothing to celebrate either here on this. You need to get above this possible triple top right at 45,000. You break that, then you start getting to around 51,000, and then 51,000 would probably be the level that is all clear, that we basically hit the low. That would probably be the number that I could use because our all-time high was nearly 70,000, 69.9 to be exact. How do you think the executive order in crypto is going to affect it? I think we have again, crypto is going to run with stocks. So if we see a bounce in risk on assets, more of these small, high beta names, again, growth, NASDAQ, if those things go up, then you'll see crypto go up because now we can't say that crypto is an inflation hedge because that's just not true. We can't say that it's a geopolitical hedge because that's not priced in. So again, gold, for example, commodities were priced in as the world is ending type risk off asset to use. Bitcoin is not that. Bitcoin is basically risk on and is running very, very closely to the NASDAQ. So again, I wouldn't be too excited on this executive order either. I don't know the details of it either. So again, I'm still holding long term. I'm okay with that. And you just have to go day by day on that. So all right, so we'll leave it there, guys. Have a great rest of your day. Thank you so much for joining me today for the aftermarket recap. Make sure to hit that like button if you like these videos. We'll catch you guys tomorrow for the morning note. We'll go over the CPI numbers together and we'll take a look at futures and see the reaction. Have a great rest of your day, guys. Cheers.